let's go over our weekly market recap for March 25th, 2024. Number one headline for last week was all-time highs again for the equity markets, especially for the big three, NASDAQ, S&P, and Dow Jones. And for the first time in 2024, they all posted 2% moves for the week or higher, while the global equity, the aggregate bond index, and gold all lagged for the week. Headline number two, again, no surprise, the Fed kept its policy rate unchanged at 5.5, and basically their dot plot was unchanged also. So they're looking at 3 rate cuts for 2024 and another 3 rate cuts in 2025. And just remember, 3 months ago, we saw that there was a 90% chance that interest rate cuts would begin this month. Well, they're just pushing them out. And really, we're not looking until June until we see even a 50% chance of a rate cut. So there's going to be 3 months worth of data that's going to come in before they really kind of have to make a decision on rates. All right, number 3 headline, again, no surprise. The government avoided a shutdown again, and at the last minute, they pushed through before midnight a $1.2 trillion bill to avert the government shutdown. It was over 1,000 pages, and of course, nobody read it. President Biden signed it on Saturday, so it's now into law. So what does that mean for our U.S. debt right now? Well, we're at a record 34.6 trillion and on track to breach 35 trillion by June. Now, again, this all assumes that the economy is strong and that the Fed is on track for a soft landing. What happens, however, if we have problems or possibly enter a recession later this year or 2025? Well, as you guessed it, we're just going to continue to spend, and this is just going to skyrocket upwards. We've got to fix this problem, and it looks like we're probably not going to do it anytime soon. All right, let's look at the top 3 market movers for this week. Tuesday, Thursday, we get housing data, Case-Shiller Home Price Index on Tuesday, and then we get pending home sales on Thursday. On Thursday, we also get the second revision for the fourth quarter U.S. GDP. The last revision came in 3.2, so that could be a market mover if it's plus or minus quite a bit on that. Friday, we get markets are closed for Good Friday. Happy early Easter. And we get the personal consumption expenditure index, which is the Fed's preferred inflation gauge. So we get that while the market's closed. So it won't be a market mover on Friday, but it could be heading into next week if that comes in hotter than expected. All right, here's a listing of corporate earnings. We're on the tail end, finally, of the first quarter results. We get GameStop on Tuesday, Carnival, Cintas, and Paycheck on Wednesday, and Walgreens are the big ones coming out this week. All right, let's take a look at the equity markets in the form of the S&P 500. As you can see, we've been in a straight line move up here since November. The markets are up 10% year to date and almost 20% since we started back in the ad mode back in November 7th. The bonds have been a little bit more volatile so far this year, and that's a lot to do with these rate cuts and them pushing them out. So the bond market's trying to figure out what's going on. We do have this support and resistance zone here, and we've broken above it. So we've gone to protect mode and back to add mode, and that's kind of where we stand, at least for right now. The year-to-date performance for 2024 is just slightly negative, so we'll see how that affects later on this year. All right, that's it for this week. Thank you for joining us. Our next update is Monday, April 1st. As always, continue to like, subscribe, and follow, and we shall see you next week. Have a great week trading.